All right, everybody. We are here with Alex Thorn, head of research at Galaxy. And by here, I mean we're at MicroStrategy's Bitcoin for Corporations conference. We actually just sat in, Alex and I were just in a really interesting talk with David Marcus of Lightspark. Lightspark recently helped Coinbase implement Lightning. And the first question I want to ask you is, as more companies or corporations adopt Bitcoin or start using Bitcoin, do you think it looks more like a treasury asset or more like they start using the technology around Bitcoin?
I mean, that's the age-old question. That's the same, I think the same question we have about regular users, right?
Mm-hmm.
I mean, David Marcus was extremely eloquent and I think detailed in explaining some of the different behaviors of people using Bitcoin in countries with depreciating currencies. It's widely used as a store of value. Yep. He explicitly mentioned if you go to Bitcoin Beach in El Salvador, they're extremely enthusiastic about spending it and using it as a media. So it's honestly hard to know. I think there is, probably both for different reasons. Similarly, I mean, a company that moves a lot of money all around the world all the time could be very interested in Lightspark or OpenNode or Strike or these other companies that, whether or backend like Voltage, the companies that make it possible to use Lightning as the payment rail and not even necessarily care about the asset. Right. As we know, remittance companies, I'm still shocked that we haven't seen more remittance companies adopt, and even stable coins is an order of magnitude better than what they're doing now. So, but again, like it really just depends. I don't think in Western countries you're going to see a whole lot in the near term of just treasury asset to protect from the melting ice cube, like Michael Saylor says. Yeah. But you might. I mean, it's definitely possible. And certainly, again, if you're in Argentina, Turkey, Lebanon, then it's like, you could probably access dollars, Bitcoin more easily than you can even access dollars, and probably more easily than you can, and almost certainly more easily than you can access something like treasuries or gold at scale. So I think it could make a lot of sense in those cases.
Yeah, very, very cool. Some of the conversations I've had today have been around normalizing Bitcoin. You look at Bitcoin through the lens of, you've talked about sort of Wall Street's adoption of Bitcoin and what that means. Have we entered the early stages of Bitcoin becoming normalized as a result of the ETFs and broader sort of recognition from Wall Street?
We have. I think the simple answer is yes. Mm-hmm. When you say, okay, when we think about investing in Bitcoin, it's not too scary. I mean, first of all, there's a multitude of ways to access Bitcoin now, right? You've not only got these ETFs, which are, super easy to access for both retail institutions, anything. They're securities. They trade on the regular, you have a securities account of any type. You can do that. But you also have had for several years now, institutional companies, Galaxy is one of them, that makes it easy for institutions to buy spot Bitcoin. Yep. Let alone, again, all the way down the stack, right? The Rivers and Swans and Coinbases, and there's many of these have offerings that make it functionally easier. I think the regulatory situation feels much more relaxed. That's not the right word. Has eased a bit in light of the approval of the ETFs. But I think the biggest thing is really macro. The macro situation is, I think, I would say deteriorating. I would say also there's a realization now that used to be something that you only heard from gold bugs about the unsustainability of the national debt in the United States. That was something that, rightly so, the gold bugs have been saying this for, frankly, decades. Yeah, forever. It's never really caught on. Gold has had good runs during those periods periodically, but I would say now you have the likes of Jamie Dimon, Jay Powell acknowledging this on 60 Minutes. Jamie Dimon's the CEO of the world's largest bank. He's acknowledging the unsustainability of the fiscal and similarly monetary situation. I think this is, obviously we've had Ray Dalio and Stan Druckenmiller, and these are very smart investors, some of the world's smartest ever, talking about that. But it still felt niche until pretty recently. Now it's kind of consensus that we are effectively in an unsustainable situation. And that has really made Bitcoin a much more attractive, I think, investment. We see this when we talk to the macro hedge funds. Okay. They look at Bitcoin. Many of them have already been trading it for several years. Okay. Doesn't mean, again, when we think of Wall Street, like literally on Wall Street in New York, right? I'm thinking more of the, it's a little bit more faster, more sophisticated trading shops. They're not necessarily like buying and holding something for years, right? They're sort of trying to find alpha in the market and deliver that alpha to their LPs. And Bitcoin is part of that conversation for sure. You could look at different layers of investors, but we see, I think, much more interest in it from endowments and pensions as well. A lot of them are, I think, struggling to get back into it. They were, so many of them got either dipped their toes or got so close to like getting interested in 2021 and 22.
Yeah.
And then sort of the market fell out, and they they're the squad that their investment committee or CIO set up like didn't have as much clout, or was even disbanded, or started looking at other stuff. They've all started to come back now. They have obviously a very different time horizon than, say, the macro hedge funds or the more active traders.
Yeah.
But they also are looking at it. I think the rates environment makes risk in general tricky, and Bitcoin's kind of in this like chasm between risk, I think, and hedging.
Totally.
A lot of people, particularly I think it's starting in the macro hedge fund world, are thinking of Bitcoin as possibly being a quality macro hedge, but it's not quite trading like that just yet. And so I think we're sort of in this middle ground where, but it appears to really be transitioning.
Yeah, I think that's a good point. Do you think that, so you brought up gold. When we saw the gold ETFs get approved in I think it was 2006, we saw basically a 10-year bull run for gold, maybe even slightly longer. Do you think that is on the radar of companies that are maybe thinking about putting this on their treasuries or putting this in their Bitcoin in their treasuries, that these ETFs might cause the same effect with Bitcoin, or are they sort of maybe now tuned into the fact that Bitcoin does have these massive dumps every 4 years? Is that the worry, or do people think that cycle can now be front run and can change over time?
Yeah, that's such a good question. If you study Bitcoin, it's like one of the Bitcoin markets and the Bitcoin price, it's quite obviously gone through these huge boom and bust cycles. It's obviously ended up basically higher each time, in some cases by an order of magnitude.
Yeah.
To me, this cycle, which is it's in fact, the concept of what we just talked about is so ingrained in it that we call it a cycle all the time.
Exactly, yeah.
I think it's different, probably. It doesn't mean there won't be booms and busts, but it feels driven by different factors than the prior. It's not just a wave of people first hearing about Bitcoin, right? I mean, that's really what we saw in 17 and 21 was like, I think most people who it would be great to figure out, like, do you know Bitcoin? Yes, no. And what year did you hear about Bitcoin? I think a huge number of those respondents even today would say like 2017 was the first time they heard the word. I think now you have to, the number of your questions really about companies on their balance sheets or on their treasuries. Just here at this conference, it's many, many more people interested in it than I've seen.
Yep.
To me, corporates, MicroStrategy's obviously led the way on this. They haven't been the most interested, in my experience, when you look at, whereas like long-term investors, endowments, and pensions have really been interested in a way, not hugely adopting, but interested. And then, as you scale back into or go down, or I guess up the risk stack from there, as you start talking, like I said, to the hedge funds or family offices or high net worths, the interest has grown, right? Like, so I think corporates, it really just depends. I mean, if you have a giant treasury, if you're thinking of like the Berkshire Hathaways, not to call out Warren Buffett, who's a fantastic investor and icon, he's got so much money in there doing, I don't know what, hopefully, and probably in treasuries or something, right? I mean, he's not even able to buy companies. I mean, there's not even that many good targets. I've watched him talk in Omaha the last time, and people were asking, like, what are you going to do with all this money? Like, and so to me, there's a good case, depending on obviously the situation in the treasury, to be looking at it. And of course, regardless of who you are, if you look at Bitcoin over almost any time frame, it's supportive to the overall risk reward potential of almost any portfolio. So, you control for volatility with position size. It's not rocket science. No one's saying you gotta. I mean, not everyone has to be Michael Saylor, right? You could do some, and I think see really positive benefit.
Yeah, totally. You don't have to have the same amount of exposure. Speaking of Buffett and maybe certain people who would make decisions as to whether or not to put Bitcoin on their treasury, maybe being a bit older. I don't know if that's the kindest way to put it. Do you think it's the generational gap sort of thing that just we don't even want to start wrapping our heads around this thing, so we're just going to sort of look past that, or have we even left that stage?
No, we're still in that stage. There's definitely, I mean, I've talked to family members and friends that are older, and some have literally said, like, you know, I've asked, well, hey, did you buy that time when I was explaining it to you X number of months or years ago? And plenty of people don't, obviously, and that's, you know, that is what it is. But I've had people say, like, yeah, I got like through like the 2 stages of Coinbase KYC verification, and then they made me do this picture thing with my face, and like I couldn't get it to work. I mean, literally, like that's, and to be clear, like even for me, I've done this a number of times. You open an online bank account or something, but it's just not that easy.
Yeah, that's fair.
And so the ETFs help with this, but also, you know, it's not different than any major innovation. Like, you know, the younger generations are more adoptive of innovation. I'm probably not going to be that as interested in adopting new technologies when I'm older. Than, you know, but the world is getting older. That's the other interesting thing. If you think about policy too, right? I mean, the average age of a member of Congress is like older than it's ever been. People are living longer. There's this question about the great wealth transfer, which is also a related question right there. I forget the numbers. I had a report on this, but I've totally forgotten the number. But there's some large number of trillions of dollars that's set to be inherited by, you know, Gen X and millennials and eventually Gen Z over the next, you know, 10 to 30 years. And the question is like, well, the younger generations are much more likely to be receptive or even already own Bitcoin. Would they buy some portion of Bitcoin with it? I know that I probably would if I was inheriting a lot of money. But on the other hand, the older people are living longer, which is obviously a great thing. So it's, we're not there yet. I think the ETFs, I mean, they make it much easier. I think if you can put the ETFs on the wealth management and advisor platforms, and then, you know, a lot of people outsource their investing to an advisor, and then they maybe can make the pitch. The average person doesn't know about Sharpe ratios or Sortino ratios or risk rewards or risk adjusted returns, but advisors do. And I think as we see those turn on those platforms, the ETFs will probably drive a new wave of inflows, many of it from people that are older.
Yeah, very cool. Final question. You're going to be speaking tomorrow at the event. What can we expect from that conversation?
It's going to be a fun one. I'm speaking with Ryan Rasmussen and Chris Kuiper. So Ryan from Bitwise and Chris from Fidelity Digital Assets. 3 researchers on a stage. I don't know, it should be interesting. Research is an interesting vocation because it's really about learning and then trying to distill those learnings down into something that's concise and easy for your audience to understand. And this is an audience that I haven't really spoken to before. And frankly, I don't know that this is an audience that I've ever seen. But I think this is the only conference focused on corporates. It should be interesting. I mean, we're going to take the question. Our panel is called Bitcoin and Wallstreet. I think it's going to be a lot about, you know, how are people viewing Bitcoin now? And because we know what Bitcoin is. Well, actually, that's not even fair. Bitcoin's very complex, and a lot of people think it's different things. But you know, we can talk about the fundamentals of what the network is, how it works, the economics, the monetary policy of the network. These are things that we know, that we can see, that are set, right? In some cases set in stone or were set by Satoshi himself. How Bitcoin price trades, how Bitcoin trades in the market. I mean, I think like I said before, as a comparison to gold, I think it will eventually trade much more on its fundamental properties. But it's widely, you know, how things trade are very subjective. I'm not going to name any equities, but many of them trade wildly out from their valuation, their underlying valuations and cash flows, right? So there's a social and there's a social aspect to investing, and you know, think about gold too. I mean, gold doesn't do anything. You can't send it. You can't really use it. Most people, it is a pet rock, literally.
100%.
Even if you're a sovereign, a lot of the gold just sits inside the New York Fed's basement.
Vault,
When you send it, somebody just like uses a cart and like walks it across the room. So it doesn't really have any real utility, in my opinion, not even as a monetary good any longer.
Peter Schiff likes to make the note that you can make watches out of it.
I know,
He's really
but
into that.
I saw Natalie was asking him, like, when was the last time you paid with a gold coin?
Totally.
I think I would venture to argue that more people worldwide accept Bitcoin as payment than gold.
Fair.
So, I think this is going to be an interesting one. I think I don't know a lot of, hey, look, it's great. Like I said, there was a lot of people here. This is just the beginning of this conference. And so I'm excited to get to know everyone and see what we can tell them or learn from them about their interest in Bitcoin.
Very cool. Well, we're looking forward to the talk, Alex.
Awesome.
Thanks so
Thanks so
much.
much.
Appreciate your time. Excellent.